Global markets are prepared for the Fed's interest rate decision. Persistent inflation, war in the Middle East has investors on edge. Let's bring in Mark Mobius, veteran investor and founding partner of Mobius Capital Partners. He spans the globe looking for opportunities. But you do have feelings about what goes on in this country as well, Mark. And I want to get, we teased that you're going to talk about India and how bullish you are on India. But you think, just bringing it home for a second, you think that interest rates of the cycle of higher interest rates is peaking right now in the United States?
I think so. I think if you look at the inflation situation, we're probably at the peak. And if you look, I look at not only the money supply, which is tapering down, but I look at the growth of money supply, and you can see it's come down dramatically. So that means inflation will be easing. Of course, the big proviso of that is with all that's going on with Israel, with Ukraine, with the pumping up the defense spending in the U.S., that may put a monkey wrench into this whole situation. But generally speaking, I do believe that we're at the peak and coming down now.
We've seen in recent days, and I don't know whether we think about it, and we all would like to spend more on guns. I'm sorry, we'd rather spend more on butter than guns, but the world is frightening. And then you look at what a shell or ammunition or whatever you want to talk about for defense, it takes a long time and a lot of effort and labor and materials to do that. And we need probably to do that. And we can't just all of a sudden, decide on a weekend to do that. I mean, it takes a while, right? And we're running out with 2 wars.
Right. Well, it's interesting. I tell people in these kinds of situations, they're winners and losers. If you look at the defense stocks in America, they're the winners in this situation because the demand for all kinds of military equipment is coming from Ukraine, coming from Israel, and of course, they're ramping up in the Pacific as well. So probably one of the reasons why the U.S. economy is doing so well is that kind of spending that's taking place. So it's going to be interesting to see how this moves forward. But I'm generally pretty bullish despite the high interest rates. I'm not saying the U.S. market will go up a lot, but interest rates will certainly be a factor that we have to look forward to. And there's a kind of a great sucking sound in some of these markets because with Fed rates going up, everybody has to follow. If you look at Japan, they're going to have to follow with higher rates. And in almost every country around the world, they can't allow their currency to be devalued to such an extent. So they have to raise rates in line with the U.S.
Is it too simplistic to say that India is just going to be a major beneficiary of even if it's just a change in the second derivative for what happens with our trade with China? I mean, there's onshoring happening. There's political pressure. There's security issues. All these things make China maybe less attractive. And I would think that India, with 1.4 billion people and the most populous nation on earth, that they would be a natural beneficiary. Is that what you're thinking?
Definitely. I'm speaking to you here from Mumbai in India, and I can feel the incredible optimism that you have here. And I think now by the way, I don't know about Foxconn, the new investigations in China about tax evasion for Foxconn, which is the big supplier for Apple. This has got to worry the Apple people, and they've got to start thinking about expanding in India because they need another big supply base. So I think, yes, India is benefiting from these developments.
It's a complicated country in terms of the democracy and various cross currents that you see with Modi. But net, you think there are positive things in terms of bureaucracies and whether it's corruption or whatever happens in countries. He's moving in the right direction. I mean, there have been worries about freedom of the press and whether it's truly going to be able to sustain itself as a vibrant Western-style economy. It is, right?
So definitely. I mean, you just have to turn on the TV set. There are about 20 channels, many in different languages, and they're free and open dialogue, very vociferous dialogues going on. It's just incredible. I just came back from Rajasthan. I was in Udaipur. And again, it's, a completely different environment than what you have here in Mumbai. I'll go down south. You'll have a different culture. I don't call it India. I call it the United States of India because they're so varied in the way they are in each of these states. States' rights are very important here in India. But the great thing is the incredible culture and creativity that you have here. I highly recommend, if you want to see this vibrant cultures, look at some of the Bollywood movies, but particularly some of the older historical movies. It's quite interesting to see what's happened in the past year. Very, very interesting.
Mark, can I ask you very quickly what you make of Japan's move to, it looks like, loosen up the yield curve control? It wasn't a full-on, go ahead, have at it type of message. How do you interpret it?
Well, as usual, the Japanese are very cautious and slow. But clearly, with the yen where it is now, they have to do something. We could see the yen going to 200 if they keep on with this very low interest rate. So again, this is an example of where the U.S. Fed policy is having a global impact. The Japanese will have to raise interest rates in order to hold the yen at this level, 150, or maybe bring it down a little bit, strengthen it a little bit. But otherwise, the yen is going to be in real trouble.